Now metals, both precious and industrial, they have proved to be some of the most profitable investments of the year so far. Silver up more than 20%, copper up 55%. But is the run over? Well, helping us figure out how to make money from metals is Gero, Senior Vice President of RBC Wealth Management. Gero, welcome.
Thank you very much. I just wanted to add I'm actually Vice President.
Can you tell us a little bit about what is going on in the gold market right now? We've seen gold prices get near to $1,000 an ounce, but so far, no luck.
Well, for one thing, there's been something in the war bill that was just passed by Congress, but not by the Senate so far, allowing the IMF to possibly sell 403 tons of gold, of course, in a careful basis, which, of course, puts some sort of a top on the present price of gold. So it's been a tug of war, up a little and down a little with the dollar and the crude. And on top of the 403 tons of gold that the IMF would like to sell to raise somewhere around $5 to $10 billion, depending on how much they will sell. There's $5 billion in the congressional bill. We don't know what the Senate will do yet. But there's also a new gold pact that will come in September to sell 500 tons for the ECB. But not all the banks may want to sell that, as they did not last year.
Now, George, one of the things we noted this week is a new vending machine for retail customers. This coming out in Germany, where you'll be able to actually buy gold bars from a vending machine. Now, is this akin to the shoe shine boy giving stock tips when you can buy gold from a vending machine? Does that tell us that the running gold might be over?
Not quite yet, because it's only in Germany so far. And they're going to sell 5 gram, 10 gram, and that sort of small coin-sized wafers. And probably the case will be just as valuable as the actual amount of gold. And so this is more of a gimmick than a reality. The reality is that there has been a very important interest in coins. And the collectors are buying gold coins, and other people who have an inflation fear are buying any kind of a gold coin, whether it's a Krugerrand or Panda or the Canadian Maple Leaf, which is one of the most popular because it has the least premium.
Well, do you buy the argument that we're going to get all this inflation? I mean, isn't it possible that we're looking at deflation in terms of asset prices, whether it be houses or whether it be any kind of thing that we own?
Well, we have temporary deflation. We have certainly not good employment figures. We have much lower commodity prices in many cases. I mean, look, rhodium was $10,000 last March. Today it's $1,000. But on the other hand, the reconstruction, the need for infrastructure, and the storms that may come in September, and the TARP money hitting in September have all helped copper. And, of course, take a look at the price of crude and the price of copper. They've both moved quite a bit since the end of the year until now.
Now, so would you be buying into any kind of weakness on gold? Would you like to see gold pull back below $900 an ounce in order to initiate new long positions?
Probably for the long term, it makes a lot of sense depending on how much gold you have. Now, I've always said that you should not really have more than 5 or 10% of any one asset. But, you know, gold has always been the liquid store of value, and that has kept up over the years and has kept your purchasing power intact. So people will continue to want to own gold. Now, there has not been any sort of a major change since November in the ETF holdings of gold, only in the futures contracts, where you've had 25,000 open interest come out of the COMEX gold, but then that comes right back, and it seems like the same people are headline trading and trading a number of thousands of contracts in and out. Right now, the non-commercial interests are much
George
higher.
Gero, George Gero, right now, I'm just going to ask you to hold the rest of that sentence.
Sure.
We're going to continue the conversation with George Gero. We're also going to ask him about copper, where are copper prices headed, and then we're going to talk about golf. This is Taking Stock on Bloomberg. I'm Pim Fox. I'm joined by George Gero. He is the Vice President of Global Futures at RBC Capital Markets. We're talking about metals. I want to turn your attention, George, just to the connection between silver and gold. Gold, you said, perhaps wait for a pullback if you want to initiate new long positions, although you think it's a store of value. What about silver?
I think silver is a half industrial and half precious. And of course, silver comes from basically the Peruvian mines and the Mexican mines, and there is plenty of silver, and it's very difficult for silver to make serious headway until gold really makes new highs. That's when people will probably rush into silver as sort of a, gee, that is an overlooked precious metal, and actually silver has done very well. COMEX has now over 100,000 open interest in silver, finally, which I'm very happy to see, and very brisk trading. And the COMEX copper has outshone silver. There's 113,000 open interest in the copper market at COMEX.
So you have to wait for a kind of a rebound in the price of gold to get that move in the price of silver. You said that silver wears that other hat, which is an industrial metal. Talk about copper as an industrial metal. Is that a proxy for what is going on in the global economic system right now?
Well, interestingly enough, copper and crude seem to show the way for an industrial recovery, and the need for both for just in the United States, in the Western world, but especially in China. However, right now, this week in China, copper was off about 5% because temporarily there's about 60,000 tons in the warehouses. And because of that, the Chinese have been slow to take new deliveries. On the other hand, they are really a rising, needy market that will continue to buy. And so the September copper has greater value than the July copper because people are now selling their nearby Julys and buying September as the rollover continues on COMEX.
Now, George, you speak a lot about what goes on in the futures market. For investors that are focused specifically on the equities market, you mentioned Peru, you mentioned Mexico as far as silver goes. What about for copper? Would something like a Southern Copper, is that the right proxy if you believe that copper prices are headed higher?
Oh, well, probably FCX and probably BH Billiton and probably, yes, I agree with you on that. But as you know, I'm not a security analyst, and I don't really want to comment on the securities markets. I follow the commodity markets very closely, all of them in New York especially. But I think copper is going to be needed both for the September TARP money that's going to hit all the shovel-ready projects and the problems of the infrastructure from the storms that are coming in September.
Now, George Gero, a question coming from a follower while you're speaking, asking about gold. He wants you to cast your mind back to what happened between, let's say, 1981 and 1999. You talk about gold as a store of value and being liquid. Was that an aberrational period in your mind?
Not really. In that time, I think you also had what I call paper inflation. You had the dot-com era. Gold was kind of in the background, but if you think back in the Depression, and I'm often saying this, 1 kilo of gold brought you a new Ford, Chevy, or Plymouth, and today it'll buy you a new Ford and probably a Chevy and maybe a Lexus.
All right, well, let's talk about what actually goes into some of those cars, because that has to do with another metal, and this is platinum. What is the outlook for platinum, and can you connect it to the fate of the automobile industry?
Yes, I think platinum is going to be, the platinum group metals are going to be most interesting. They've come down in price, and they've been down in price because there's been a fear from the platinum group market dealers that the bureaucracy will take a lot longer than we believe to get Chrysler and GM out of bankruptcy, and no new orders will be coming for at least 90 days. So they've been hedging on the futures markets, but now I believe that in the long run, the piston engine will continue to be here, and so will fuel cell and all the other engines that need platinum catalytic converters. And at the International Precious Metals Institute annual meeting this past week, we talked about the need because of the new diesel cars that are going to come from Germany. And some of those cars are really excellent, and the U.S. will have diesel cars. They'll give you over 50 miles per gallon. They certainly will need platinum for the catalytic converter, and so will the oil industry, because you need the platinum as a catalyst to crack crude oil into heating oil and gasoline, even though the oil companies try to reclaim it now at these prices.
All right, so I'll give you about 10 seconds, George. Platinum, go long right now?
Probably in the fall.
In the fall?
Yep, probably in the fall. I think the markets in the metals are going to be a little bit quiet until we see how everything comes out with the automobile industry, because the automobile industry is the main driving force for the platinum group metals right now. Jewelry demand is down.
All right, I want to thank you very much. We'll watch what happens to the automobile industry going into the fall. I want to thank you right now, George Gero, coming to us from RBC Capital Markets, talking about metals.